Good evening, everybody. It's Andrew Pancholi here in London at just after the market close, and it is the 13th of April. Several of you have contacted me about what we wrote in the report, and so here's a quick update on my thoughts. So as regular readers are aware, we do have a weekly turning point this week, quite significant weekly cycles coming together, suggesting some sort of reversal of direction. And also we're saying here we have a turning point window 13th to 14th, that's today, tomorrow. So this is really interesting because it's tying in with the weekly cycle point as well, suggesting something big should be happening. However, the markets are not making it easy for us to decipher what's going on. The report also noted to look for a turn on the 2nd and 3rd of April towards a bearish acceleration, i.e. low, and the 7th to 8th as a possible reversal. So let's take a look and see what happened. Well, we can see that we came into a low here on the 2nd. Was it a bearish acceleration? It certainly was quite bearish into that. And we made a low there, 2nd to 3rd, and the next date was the 7th. And this was showing actually the strength of the market. We only got we didn't get a very strong bar, so we got a one down close there. So again, the date came in correctly, but not really having a great impact on what was going on. Now let's put this in the context of the 90-year cycle, which is what I've been talking about for the last few years. And the point really was this fractal pattern that's unfolding. So we came down like this, we popped up, came all the way down here, bounced up, came back down again, and then headed up towards the 50% level there. We slightly exceeded that level, and then we carried on down into an orderly decline. So we don't know if this pattern is going to play out or not, but we are following something very, very similar, albeit over a much shorter time frame. Here are the June E-mini S&P 500 futures, and you can see we've got up to this 50% retracement level, and we traded slightly above it there, and we're trading below it now. So this is kind of pretty interesting. Let's just compare it back to there. You'll see we popped above that level there in the 29 chart as well. So that's where we're at right now. Given that we have cycles, daily cycles tomorrow and a weekly cycle, does this mean we're going to get a turn down, or is it going to go accelerating up? The honest answer is I just do not know. Let's just zoom into a 240-minute chart, and you can see we've got up to the 50% level, and we're just trading below that. But pretty much we're pretty much intact here at this moment in time. We can pop in this trend line here, tying these and going back, as course members know how to do this, and project this down here, which works pretty well. So really, a bear market would only be sort of confirmed once we break out of this channel to the downside over here and get a low, a trade below these lows here and a close down there. So at the moment, we're actually just in a bit of a range, and that range really is defined by let's put a couple of lines in there, something along. Let's take that top there and put the same thing in somewhere along there. So on an intraday chart, we're sort of heading into a range, and again, we can take this line here and pop it into the middle somewhere around about there, like that. I think probably, yeah, about that. And we can see that we're sort of trading at this midpoint line here. So we don't know whether this is going to hold and take us back up here, or whether it's going to come back down here again. So what I'm really saying is that we're just, as we come up to the just 3 minutes past 9, we're just sort of bouncing off this area here. We don't know whether the market's going to turn around and collapse yet or not. We need to see proof of whether it's going to break down or not. So several people have been asking me, is this market turning down or is it heading up? The answer is I don't know, and it's okay not to know. That's part of professional trading. We want the market to tell us where it's going, and we want to get the odds on our side. So that's what I'm seeing right now. So if the market continues to hold this line here, this center line, then that would really keep the bullish case going. And several of you course members have been asking, but what would how do we stalk a down move to see if that's playing out? Well, the answer is by popping this in here. This is a downsloping pitchfork. and you know how to calculate the risk reward ratios there. But if this line here then holds and we start breaking down, that would be the first sort of signs of a confirmation of a breakdown. So we can't guess these things. Just take a look at these and follow what the market does, and then if you can see a setup where you can get the risk reward ratios right, that's up to you there. Bottom line is, I do not know what is happening right now, but I am watching very carefully. Right, the next market I want to look at again is gold. I've had several questions. Now, we do have big monthly cycles this month. Now, monthly cycles have a window that's basically 5-6 weeks wide, so this makes life a little bit tricky. Within this month we do have some weekly cycles, but there are several weekly cycles and there's no really solid cycles where everything comes together. So that suggests, like I wrote, we're going to get some volatility, and that's what we're getting. Now, the premise, for those of you that aren't familiar with this, was we were working on this long-term pitchfork that caught the high. They're going all the way back there to the 1976 low, 1980 high. Now, just bear this in mind. This is a 40-year cycle high there. But that's just by the by in terms of cycles. So 4 10-year cycles or 2 20-year cycles. We've got this in place here, and then we did this. We took that line there and we put it off the top there, and that's why we thought we were hitting overhead resistance, and we've actually gone through it at the moment. We're trading above it. Now, that's because we've got a bit of a blow-off move going on, and it may or may not hold. I don't know. Let's have a look. But the validation of that was the fact that this held here. So this is certainly a very strong area. We're getting pushed through because of government policy and so on. But basically, that's where we're at with this right now. So I was looking here because we were hitting this line. We have gone through it at the moment. It might just be an overshoot, or it might be a genuine breakout. So we'll have a look at this in a little bit more detail. But the key point is that these cycles are wide. These are big long-term cycles that come together. They're not like we do have daily cycles that I mentioned in the report, but the big cycles suggest that we could well be approaching a significant turn. So that's the first point I want to make. So first point is I'm very grateful to Dr. Richard. I'll just call you Dr. Richard. You know who you are. Very, very successful trader, and who's been involved with our program for a while. He pointed out that we'd reached this doubling of the range, which is this major level there, and we pulled back there. So and we have exceeded that now. So the question is, are we going higher or not? And the answer is, I don't know, but there are some very big cycles. We don't know if this is just an overshoot that's going on. But so let's take this a little bit further, and we've popped this in here. So what I am just going to do is make it a little easier to start with, and show you this pitchfork, which actually was set up like this for the course members. They'll know how to do this. Very good there. But it wasn't really defining exactly what we wanted, so we moved it over to the modified shift like that. And the nice clue was there that we sat along there, some good touches there. And this is what I particularly liked. Is just projecting this backwards. We really got some nice sort of highs and lows. And then popping in the warning lines like this, we can see that these levels have worked generally pretty well. So we might well be heading up here. I honestly don't know. This is a really tricky one to call. Now, the other key point, and one of the main reasons I'm putting this video out, is A, to clarify the situation on gold, and B, today actually has a series of cycles that we didn't write in the report. They've become stronger since. It's very unusual that this happened. So this is the key information, is that we might well see a bit of a reversal today. So otherwise, that could be a distinct target all the way up there. In these crazy days. Again, I don't have a strong view. The long-term cycles suggest a reversal within the next few weeks. It could be within the next 24 hours. It could be over a period of time, over the next few weeks. But this is a wild market. It's very difficult to protect the risk and set up risk-reward ratios. So I'm standing aside. And whatever you do, please protect yourselves and make sure you've got all your risk reward ratios in place. So I hope this helps, and thank you again, and I'll speak to you soon.